Hello, everybody, and welcome back to the Dash Trader Newsroom. From trade wars to an actual war, what else is in store for us this summer? Let's jump right in and get started. My name is Michael DeJoy. I'm the Director of Educational Services here at Dash Trader, joined by my co-host Jill Melandrino, Global Markets Reporter at NASDAQ. Jill, how are you?
Good, doing well, Mike. Never a dull moment.
Certainly not this year. We haven't had a break yet. All eyes are on the Fed. Does the Federal Reserve see two more cuts this year? What is the expectation from the Fed at this point? I mean, we've had such a crazy news cycle. It's been so fast paced. I mean, you and I have, really had no chance to even take a breath this year from right from January. So what are your thoughts on the Fed going forward?
So I think the Fed is in an incredibly difficult spot. It's interesting. Um, Senator Elizabeth Warren was on earlier this afternoon, and she actually echoed what President Trump has been discussing in terms of getting rate cuts to service the enormous amount of debt that we have. Now, it's not often that you hear Senator Warren and President Trump be in lockstep with each other. The lack of fiscal discipline is technically not the Fed's problem. The fact that we
Yeah.
continue to dig holes deeper and grow the deficit to nearly $40 trillion is not something that the Fed was responsible for. Um, you're not going to, the challenge is who's going to want to cut entitlements and be the person to provide that discipline going into the midterms, right?
Yeah.
So I think, as has been the case, the Fed kind of becomes the sounding board, the whatever, kind of things roll downhill, if you know what I mean.
It's the
So
scapegoat almost. It almost
it's
becomes
that
the
sort,
scapegoat, the whipping
right.
boy.
The whole thing is you could, it's a double-edged sword. So if you cut rates, um, our debt is so enormous that we'll still just be squeaking by in terms of making repayments. The fact of the matter is, if you don't get spending under control, Mike, it's almost like if you get, you max out a credit card, then you go to another credit card to get a better rate, but then you max out the other credit card again. You're not
Yeah.
doing any, you might get a lower rate, but you're not doing anything to solve the problem.
Yeah.
Uh,
I mean, it doesn't look like this ends well. I mean, it's just literally just kicking can down the road for. I mean, you and I have been talking about this for 5 years now, that we just keep kicking the can down the road, and nothing seems to change the paradigm.
Yeah, well, and again, it's hard to be the one to make those hard choices, and cut entitlements here or there. The problem is, as I see it, and again, I'm not an expert in politics, but to be able to whip up support and be able to make deals across the aisle is just something that we don't see or hear about happening. So it's not as if there's any will to negotiate or make those trade-offs, and I think that's why there's a stalemate. Not all Republicans support it, and the Democrats don't appear to want to even hear about it. So it's challenging. It doesn't look as if there's any constructive resolution in the future, sadly.
Yeah, certainly. And now things have gone from bad to worse, as we went from talking about trade wars to actually dealing with an actual physical war. Markets haven't seemed to reacted too much. I mean, the markets are down slightly since the Israeli attack on Iran's nuclear facilities. But what should we expect? I mean, I'm looking at. I have a little chart of the markets here, and I mean, it doesn't really seem like the market has reacted too much. I mean, we're still at all time highs.
Right.
We're very near all time highs. We're not quite at the high, but the markets have really not done too much, and this is really,
Mhm. So,
this is.
Mike, this is what's interesting. And we just spoke about it on a panel that we did in studio a couple minutes ago, and you and I have certainly spoken about this. If you look at the market year to date, it's up about 2.3%. Okay, flat, not much going on. Now, if you look at it, for those 6 months in between, think of what we've said in that April timeframe. This is one of the most chaotic markets that we've witnessed, having been through 9/11, .com, GFC, COVID. It just felt very dysfunctional and chaotic, right?
Yes,
Now,
absolutely.
so May, nearly the end of June, now we're saying that this is the most complacent that we've seen the market in recent memory, when there's when every asset class looks as if it's coiled one way or the other, right? You have equities range bound, fixed income, Bitcoin range bound. If you look at the gold silver ratio, what that indicates, if you look at what vol indicators are suggesting, everything feels as if it's at um, an inflection point. Range bound can tend to be scary when there's complacency out there. So it's crazy in April, you're talking about the most chaotic in our careers to the most complacent in our careers 2 months later.
That indicates technically when you have intense volatility, that actually is bearish. In
Right.
crazy volatile markets that have just they swing from complacency to fear back to complacency again, it would be considered would in from my technical
Right.
analysis background, would be considered bearish
Right. I mean, look at the round
or
trips that we saw.
cautionary, at least cautionary.
Right. And again, I'm not suggesting to, I'm not being all doom and gloom. I'm just making the point of the paradox of what we were saying in April and June and that chart there. And in many cases, we made, multiple percents of round trips in just one session.
I totally agree that when you have an ascending wedge pattern coming into a double top formation after a steep decline and rapid recovery, that is volatility, and volatility is usually indicative of distribution, not accumulation. So
Right.
it is a
But Mike, here's what's so interesting. You could technically have vol to the upside as well. When your volatility is a measure of movement, right?
yes,
So
yep.
what happens if there is a resolution with tariffs? If we don't get involved with Israel and Iran, and there's some sort of deal that's to be made, is that the catalyst to propel these markets? Is there more room?
Yes,
But think about it in traditional, let's call it more reasonable rates of return in terms of expectation, 7 to 8%. You look at that over a lifetime, that's a nice rate of return on annualize, when you annualize it out. In 5 years, the S&P is up nearly 95%.
it's crazy.
That's an anomaly. It
It
doesn't
is.
typically double every 5 years.
Yeah,
So
and another technical analysis statistic is that very often, 70% of the move is in the last 30% of time. So in a prolonged uptrend, a lot of times you'll get this kind of bubble or ascending wedge, very steep rip before some kind of correction occurs. So there's a lot of cautionary technicals,
hmm,
as well as what I'm going to put on the next slide, which is the wall of worry. Let's just talk about the wall of worry. We a month ago we just had trade wars. Now, or 3 weeks ago, we just had trade wars. Now we have real wars. We have upcoming earnings season. We just had a weak consumer spending number, okay, showing that the consumers are no longer spending specifically in restaurants and not going out to eat as often, that Americans are cooking home again. Interest rates, right? So, we are looking for the Fed to cut two more times this year, but the war in the Middle East, although it did not affect the markets,
right.
has massively affected the price of oil, and oil does have inflationary effects. It is the prime commodity, and it could drive up. It it will take time to drive up the price of everything else, but
Mhm.
that could cause more inflationary concerns. What are your thoughts on all this?
It's really interesting you brought that up because it can also impact the consumer as well. When you think about inflation, what's happening in gasoline prices is typically the first thing that you take a look at. We've heard a number of airlines over recent weeks dial back on guidance because of the lack of travel that they expect to see relative to comps. My colleague Max on the desk here brought up a great point in terms of earnings. We're in a vacuum right now, right? So in June, it's largely the headlines. There's really nothing corporate to tell, but you usually can discern these trends from the conference calls and so forth. So tariffs is what we were talking about in April, May reporting timeframe,
Mm-hmm.
right? You was getting involved in Iran Israel war on the bingo card, not even close. Right. So
No.
now that calculation, especially for consumer companies and travel companies, any discretion is going to have to be factored in if gasoline prices becomes an issue. We weren't talking about that last quarter.
Yep. No, not at all. It wasn't even on the radar screen.
Yep.
And then again, that affects what the Fed is looking at, because although the Fed gets a lot of abuse in terms of saying that the Fed should be doing this or the Fed should be doing that, but the Fed has to actually look at and see how oil prices will now get factored into the inflationary numbers.
Yep.
It's a lag of at least 1 month, no less, probably 2 to 3 months. So, where as we go out in the year, it looks like, inflationary concerns could reemerge due to this drastic price. I mean, what I have up here is the USO went from 64 up to 83 on
Wow.
the USO, right? So I mean, from a percentage basis, it's a massive percentage move, and it was a move on volume. So we would expect to pull
Hmm.
back and then see where it levels out as
Yeah.
as the war continues to kind of get factored in.
Yeah.
What
Well, what's
actually
interesting.
happens with it.
Right. Well, what's interesting too, when you think about the consumer, when you see your portfolio over the past 5 years, assuming you're indexed to the S&P up 95%, right? If your portfolio is performing well, you're not as concerned about, inflation daily on your mind, particularly if you're employed. So
Yeah.
there are some disconnects there, that I just don't think it's emerged yet. So
Well, the other
hopefully,
thing that's been coming out is that like Amazon has been laying people off as it implements AI to replace kind of redundant jobs, and other big tech firms have kind of started to cut back their labor force as they really put AI into their business operations. So I mean that's another factor that we have to deal with, is this kind of implementation of AI into the workforce. Is that going to lay people off? What are the effects on the economy as this previously high paid sector of the economy may not be may have to retool, right? They may have to figure out some new skill set. So
yeah.
I mean, definitely a lot of concerns out there. And but what do you see coming up in the next earnings season? As we are, this is the summer earnings season. It tends to be kind of um, a preview to Christmas and the holidays. It's kind of the start of the supply chain for Christmas.
Yeah. Well, it's interesting. I always think that, the third quarter, not the reporting of third quarter, but the July, August timeframe, I feel like it's condensed more so than any other time of year. So it feels really rushed and there's a lot to digest. I think,
Mm-hmm.
should the war carry on and, to your point, oil prices become a factor, you're certainly going to hear about the impact to the consumer. And, as we say all the time, the consumer and retail space and travel, it's going to be the haves and the have nots in terms of where they're allocating their resources.
Mm-hmm.
That would be the obvious headline. And again, if we get involved, in the war or not, are we looking at defense companies now? Or, um, what happens in the oil space in general, what's happening with the dollar, is gold going to continue its climb, which I think is up like 32% on the
Mm-hmm.
year,
Yeah.
right? So there's it's some, I don't know, like almost an all or none situation. Um,
Mm-hmm.
and I also think, not that, besides being complacent, but perhaps that the market is so used to like the zone being flooded with so many headlines that it's just
Yeah.
learning to digest it in a different way.
It's almost information overload. I feel like this year has been so many items in the news cycle that you're just constantly ping ponging back and forth between trade wars, real wars, earnings, weak consumer numbers, interest rates. It just seems like a lot all at once, and it's difficult
Right.
for traders and investors to adjust. I mean, traders certainly are more accustomed to it, and it's more beneficial for trading. It has been an excellent year.
Yeah.
But the question is how do we deal with it going forward, and what comes next?
Right. And I think, Mike, too, the point that we were saying before, not just equities, but multiple asset classes and areas of the market are coiled, if you will, again, to the upper or the downside.
Yep,
And that complacency, and with all these headlines, you don't want it to become something like the little boy that cried wolf, and you're caught off guard when
yep,
there's something that could have systemic impact.
absolutely. Well, thank you so much as
You're
always, Jill. I'm going to
welcome.
jump to the charts and take a look at gold and cryptocurrency. All right,
All right.
all right.
Talk
Take
to you
it
soon,
easy,
Mike.
Jill.
See
Thank you
ya.
so much. See you soon.
Bye bye.
All right, so we're gonna jump right here into our market analysis. All right, so here we have our dash trader, and I'm just gonna take a look at the QQQ first. I'm gonna pop this open, and hopefully we can see the daily chart. So here is the daily chart. I mean, we are definitely coiling at the highs. This is definitely an area of overhead resistance. But obviously you can break resistance. We are not quite there yet on the DIA. So certainly on the SPY, we are at or near resistance. At the DIA, we're kind of maybe 20% off the highs. The high was at 452-ish, 450, and we're at 422. So about 30 points off the high. On GLD, we just recently made a new high, and then we have pulled back, but we are definitely in an uptrending market on gold. On silver as well, we've had a significant breakout. I mean, this is something that is significant, and I haven't seen a breakout like this in silver for quite some time in the 30s. It's been a long time. So we have silver. Let's take a look at GBTC. So GBTC, Bitcoin, kind of also that same kind of consolidation at the high, recently made a new high, ETHE, which is Ethereum. Different pattern completely on Ethereum, a little bit more similar to the DIA. Let's take a look at TSLA. I haven't really been watching Tesla so much lately, but it's certainly not at its highs, but also certainly not at its lows. NFLX. Basically, Netflix has taken over for Hollywood, so Netflix at all-time highs. Chart, not as good as it was. It's kind of tangled in its moving averages. So certainly that one is interesting. MSFT. Microsoft has gapped up and ran to the races, after being slightly an underperformer. Apple definitely is underperforming, so Apple definitely taking a lot of heat with all the tariffs and trade wars and whatnot. Also, Google underperforming, and of course the last but not least, Meta holding up pretty well, but certainly not at its high and could potentially swing back below its moving averages. Let's just take a look at like, some old economy stocks like ExxonMobil making a move to the upside with oil. Um, let's just see like Ford hanging in there pretty well with the Buy America stuff. GM kind of in the middle of its range. GE having pulled back. Costco, let's see Costco, big retailers like Costco, TGT, Target certainly taking it on the chin. So, I mean, we got a really a mixed bag out there. PLTR, Palantir at its all-time high or near its all-time high. But certainly a lot going on out there in the markets. We're going to have to just, I would say, caution and trade carefully. Stay up to date with all things DAS by signing up to our monthly newsletter and email. Simply fill out the form at the bottom of the webpage at www.dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, and our DAS Newsroom reminders. Follow us on social media at LinkedIn, Twitter, Facebook, and Instagram. And we have a trading number one best trader competition coming up in October, so get ready for that. Stay tuned for updates on the number one best trader competition. Will be the trading competition for this year. So we look forward to all you new competitors as well as some of you returning to take the championship yourself. So trade well, everybody. Have a good day. Till next time.